Hey, good afternoon, everyone. My name is John Geminade, EVP of Production here at Angel Oak Mortgage Solutions. Thank you for joining us today. People are still logging in, so we're going to get started in about a minute. I will introduce our subject matter experts. We got a couple of new faces here today, so looking forward to it. So give it about another minute. We'll get started. And just so give everyone some housekeeping rules. Everything we're doing today is from our website. This is not a PowerPoint. This is not a recording. This is live, so we might run into technical difficulties. If we do, we're sorry. But we'd like to have fun with these, and hopefully you get a lot of value out of this. And today we're going to talk about bank statement borrowers. It's one of the most underserved, uh, probably the underserved borrower and the most that people don't know about. So we'll get started here in about 30 seconds. Still people logging in. Appreciate everyone joining us. Hopefully everyone's having a great May um, and looking forward to the Memorial Day weekend. Give it about another 15 seconds. All right, let's get started. Hey, again, my name is John Geminade, EVP of Production here at Angel Oak Mortgage Solutions. I'm going to be here 11 years next month. So, and then I'm going to introduce our two subject matter experts, Al Wooten. Al, introduce yourself. Tell us a little bit about yourself.
Thanks, John. My name is Hal Wooten. I'm an account executive in Michigan. I've been with Angel Oak nearly 5 years now and been a mortgage guy since the 90s.
Wow. So thank you, Al. Appreciate you taking the time out of your day to help us on this webinar and be the expert that you are. Drew Ruggieri, from my old neck of the woods. Drew, please introduce yourself.
Thanks, John. My name is Drew Ruggieri. I have been here at Angel Oak almost 6 years, and very similar to Al, I've been in the mortgage business since late 90s, 98 to be exact. So, been through a lot, seen it all. Love to help you guys.
Love it. Love it. So again, just some housekeeping rules. This is going to be recorded. We will get this out to you before end of day tomorrow. We want this to be as interactive as possible. So use the question queue. Shy away from the chat. We might not follow the chat as closely as we do the question queue. So please, ask any questions that you have. We'll get them answered. So let's get started. But before we roll into the actual bank statement highlights of the bank statement program, we're gonna launch a poll, and the question that we're gonna ask is, who have you originated a bank statement loan in the last 12 months? So while people are doing that, I'm just going to throw some stats out there. Since COVID, uh, there's been about 440,000 new business applications every month. So that's over 20 million new business applications have been formed over, the last 4 or 5 years. So it's the fastest growing segment. Everyone hears about the giga economy, right? It's out there. So Al and Drew are going to talk about different scenarios that they see and deals that they close that are actually real live and how we're able to get those closed. So, all right, let's look at the poll here. Okay, appreciate those who have participated. So 68% of you on this call have not originated a bank statement loan in the last 12 months. So thank you for joining us. Hopefully what we share with you today is going to be how easily these loans are able to close. So thank you for participating. And let's get started here. So hey, Drew, take us through the highlights of our bank statement program.
Absolutely. So as John said, I think it's one of the most underused programs. Lots of people know about other, kind of DSCR and other non-QM programs, but one thing I always try to make apparent and let people know is that, you may be able to get your borrowers approved for a full doc loan using their tax returns, but you could actually get them approved for more using their bank statements. So just real quick, really you have the standard guidelines for our bank statement program. There we go. So we'll go up to a $4 million loan amount. Minimum loan amount's $150,000. This bank statement program can be used for purchase transactions, cash out refis. They can be used for rate and term refis. They can be used for any occupancy type, for primary residence, second homes, investment properties. We will allow 12 or 24 months worth of business or personal bank statements. And then your borrower really has to be at least 25% owner of the business, or what I'm seeing a lot, as John mentioned, the gig economy. So if someone's 1099, you could also take advantage of this program by gathering their bank statements and calculate them based off of their deposits. Permanent resident aliens, along with non-permanent resident aliens, are eligible for the program. And we do all the heavy lifting for you. So provide us with the 1003, the credit, and the bank statements. And typically within about a 24-hour time frame, if we have all the pages and we have all the statements, we'll calculate the qualifying income for you. And then usually a conversation between the account executive and you guys, we can kind of figure out where you think the borrower's expense ratio would be. I love the program, and I can't say enough about it. It's definitely underused.
Yeah, no, Al, and we'll get into the questions, and again, please use that question queue for any questions you have for Al or Drew or even myself, but they're the experts a lot better than I am. So Al, talk about what you want to see on a 1003. The credit, talk about, trade lines we require, and then we'll, we already have questions coming in, but if you please, just talk about the 1003 and the credit, please, Al.
Okay, thanks, John. Talking about the 1003, I'm going to talk about it, and I'm going to ask you to rethink the way that you take your borrower's application. You've heard the word underserved when we're talking about self-employed borrowers. Why is that? That's because the current borrower model was built around the 1960s. Well, there's a lot more self-employed people, and they haven't caught up. That's why we're here. So the reason I'm going to ask you to rethink your 1003. That 1003 is designed, when you go through it, to nail down every single thing that can pop up. When you're doing the employment section, you're going to say, okay, you're self-employed. You file 1120s, you file 1065s, whatever it is. Also, this is the part I'm going to ask you to rethink. Also, ask them to get not 2 months or 3 months bank statements to show assets, 12 months bank statements, because then you're covered. You don't have to go back to them, and you can look at both incomes. If you've got 12 months, what 12 months do you want to get? You want to get wherever they make their business deposits. And I would honestly just get both, since you're getting everything up front. The reason that you're going to want to do this is exactly what Drew just said. A tax return tells you what a borrower is legally required to pay tax on. That's not their income. You want to get the income of the borrower, you get their actual income. And I'm talking about accuracy. You want something accurate, get their bank statements. That's the most important, part of the application. Outside of that, when you do send your application to us, we're going to talk about the pre-approval process. You're going to want to, once again, make sure that the more complete it is, the better. But you're going to have the current address in there. We're going to want to see assets. The rest of it's pretty standard. The part that sticks out for us is get the bank statements if they're self-employed.
Yeah, Drew, Al, sorry about that. Al, I kind of always do a public service announcement, right? I'm doing it a little earlier than I usually do in the bank statement program, but it's like, if you are going to meet with a self-employed borrower, go down those parallel paths. Like Al said, get their tax returns. But while you're doing that, grab their bank statements, right? Because you guys know what happens. They tried going down the route. They already put a contract in. on a house, and because the borrower told you they make $20,000 a month. Well, when you got their tax returns, they only actually make $6,000 a month. Now everyone's hair is on fire, right? And that's when they come running to Al and Drew and they say, I got a self-employed borrower. Go down those parallel paths, but do it at the initial meeting with your borrower. Sorry, Al, just that was that PSA. I had to get it.
Thank you, John. As far as the parallel pass, that's also, this is a different product. The number one thing that I run into when I talk to loan officers is they're concerned about using something that's different, because what's the most important thing in your business? Your reputation and your relationship with your realtors. If you have this information up front, you're running it parallel, it can honestly be seamless. It's a way to take a great app.
Yeah. So Al, talk a little bit about what we require from trade lines perspective, please.
Okay, trade lines. We're looking for three trade lines that are open for 12 months. Hopefully there's activity. If they've been active and they're not active and they're open, that's okay, as long as they've been open for 12 months, or 2 for 24.
Yeah. So, and the other day I usually go into is, 25, maybe 25% of the loans we close don't meet our guidelines. So, and that's because people like Drew and Al and their expertise to know the right questions to ask. So, all right, guys, let's get into the Q&A part of this. We got a lot of great questions coming in, and you might have to look at your matrices, so feel free to rumble through the paper. So, Drew, I'm going to start with you. What's the max LTV on an investment property cash out? By Julio's asking that question. Great question, Julio.
Yeah, absolutely. So for cash out on a bank statement, you can go up to 75 LTV.
Yep.
You got to have at least a 660 score to be able to do that.
Yeah. So again, every scenario is different. So like Drew was just saying, it depends on the credit score. It depends on the LTV you're looking for. But again, these guys are experts. And so Al, I'm going to ask you the next question from Scott. How do you look at the expense factor? And this is a great question. And this is where we probably have a decent amount of flexibility, dependent upon finding out more information. But go ahead, Al.
As far as the expense factor, it's here's the great thing. We nail all this down when we do the pre-approval. Once again, it's done up front. That prevents problems down the road. We're going to look at it. They're going to do the bank statement questionnaire. It's just a simple one pager with 5 or 6 questions that tells us what they do. Do they have an office? Do they have several offices? Generally, it's going to default to a 50% unless there's something to make it different. Maybe a restaurant, we'd go to 70% on because their expenses are higher, or somebody with brick and mortar. And then if you've got, like, let's say, I see it all the time, people that are e-commerce, they're selling stuff on eBay. They can have as low, it can go 15, 30, 25%. But what we need for that, have them call whoever does their taxes and say, hey, what does it cost me to run my business? Can you write a letter and tell me that? Sometimes they'll put it into percentage. Sometimes they'll put it into dollar amounts. Like I said, from a CPA or from a tax preparer, whoever does their taxes, and send that to us. And then we look at it. If it needs a higher determination, then, we can set it up. We can give you something back in writing that's worth the paper it's written on.
Yeah, and Al's mentioned this a couple times, and we're going to get, people are going to probably ask about rates. We've done enough of these webinars, but we're going to take you through how to look for rates, how to get rates, and then how to submit a pre-qual. Drew, which brings me to a question from Carla, and Al's referenced this a couple times. Do you have a worksheet to use to calculate the income?
Yeah, that's a great question. I get it, if not every day, at least several times per week. And I referenced it earlier. No. Short answer is no. We're not going to send you an Excel spreadsheet and put that requirement on top of you. We're going to do that heavy lifting for you. And then we're going to give you a nice, pretty little, email back that says, here's your income, here's your expense factor. So we're going to do that for you. And again, as long as you provide us with all the statements, we'll have it. I say 24 hours, but our team's been doing a fantastic job and getting it back quick.
Yeah, and that's what we have. We have just a team dedicated. They use a little bit of AI and then they review it. So it's, that's, how AI is coming into this equation too. So, we're advanced on that front too. But, Carla, it's a great question, but we do all that for you up front. And Al's mentioned it, Drew's mentioned it, the heavy lifting. We do that up front. So, Drew, give examples of the purchasing power and how many times you've seen exponentially if the borrower had tax returns and how much we've increased that borrower's purchasing power.
Oh, absolutely. It's multiple times that, you kind of referenced it in earlier have come, lots of deals have come to me with, hey, we're under contract already. I've squeezed as much as I can out of these tax returns, but I'm just not getting there. And my borrower went out this weekend and saw a house that they absolutely loved, and it's above our price point that we qualified them for. And I really need to help you out, or I need you to help me out. You're talking about thousands and thousands of dollars, and the fact of just either whether they don't qualify or they're qualified, or, you could get them qualified, but now you're requiring them to put 30% down, because you need to get their loan amount down for them to qualify based off of their tax returns. And then maybe with the bank statements, we could get them qualified at say 80 LTV, save them money out of their pocket. And it's just a better situation for the borrower.
Yeah, and Drew, I've seen in some cases and examples of, increasing that borrower's purchasing power 3, 4, maybe even double. And who loves that? Well, guess who loves that? The realtor, right? Because now that borrower, instead of buying a $300,000 home, maybe they're buying a $600,000 home. And guess what? Everyone on this call is based on the loan amount, right? And the realtor is based on the purchase price. So if you're going to make your referral sources happy and you're meeting with a self-employed borrower, why not get their bank statements? So Al, Williams on this call, they just started doing DSCR programs. That's great, William. William knows that the default, as you mentioned earlier, Al, is 50% expense ratio. However, if the CPA is willing to write a letter detailing a lower expense ratio, will Angel Oak accept that? And Al, that goes back to the business questionnaire along with the CPA letter. So go ahead, Al, expand on that, please.
Yeah, thanks, John. As far as the expense ratio, it's real simple. We want to know, what does it cost to run your business, because we're going to subtract that out of what they make. So to find out what it costs, that business questionnaire, if it doesn't show up with the pre-approval, there's a spot you can print it. We're just going to send it to you, and you can send it electronically to your borrower to fill it out. It takes a few minutes. That information combined with the CPA's letter. CPA's letter, when you call the CPA, I have people, or tax preparer, I've had several people ask me, well, what do I ask them, or what do you want? What we want to see is whatever language that CPA or that tax preparer is comfortable putting that in, whether they want to show dollars and cents, whether they want to show a percentage. Sometimes they'll break out exactly what the dollar amounts are. As long as that letter tells us what it costs the borrower to run that business, then we're going to take that. Let's say it's 20%. Well, 20% might seem low. We have a desk, and it's a risk desk, and we send it in. And if I send it in right now, by tomorrow morning sometime, I'm going to be able to call you back and say, hey, I'm sending you an answer in writing. We approved it at 25 or 30% or whatever it is. It makes your income this, whether it's, enough to qualify, not enough to qualify. These loans, there's a lot of options, and that's why I'm here. That's why Drew's here. That's why your account executive's here. We look at this stuff every single day. When there's a problem, you talk to us, and, we figure out the best. We're always going to come back to you with, it's either going to be if it's a no, it's a quick no, which is much less painful than a slow no. And then if there's an option, we're going to give you the option. So, you're going to get it all, and you're going to get it right at the pre-approval phase.
Yeah, and Drew's mentioned this before, and Al just said it. The beautiful thing about that is we are doing this up front. Hopefully before your borrowers put a contract in on a house. So, but we're doing all this, as Drew said, heavy lifting up front, and there's not going to be any surprises. So again, I'm learning more and more about our competitors out there, and they don't do the pre-quals. And if you've closed loans with them and that's happened, that sorry for that. But Drew and Al and all our other account executives across the country are basically doing a pre-underwrite, and they're doing it for you at the pre-qual stage, and that's rare. I'm finding out that's really, really rare these days, guys. So a lot of great questions coming in. I lost this. I'm going through a few. Okay, Al, Drew, great question here. When do you consider 12 months or 24 months?
When? Well, it's. I kind of put that question back to the loan officer, and then you guys would kind of ask the borrower. The real difference is at 80% loan to value or less, the pricing's the same. So if you're doing a higher loan to value, 85 or 90% on our bank statement loan, which is what we would allow, it's going to be advantageous for the borrower if they supply 24 months worth of your bank statements. But at 80% or less, 12 and 24 are the same rate. We're going to look at all 24 and do an average. So we'll calculate for you. Again, we'll do the heavy lifting. We'll calculate, okay, are we getting a better average using 24 months, or are we getting a better average using the 12 months? We'll do all the analysis for you.
Yeah, and I always default to that. Give me 24, right? And Al and Drew, are basically your confessional booth, right? They are, so if you get us 24 and we see there's decline in income in the most recent 12 months, so then, or there's, how am I looking at this? Maybe they started, all right, here, maybe they started their business 24 months ago, in the first 12 months, not that much income. And the last 12 months, the months 12 through 1 are really, really good income. We'll drop months 13 through 24 and just go with the most recent 12. And I probably just confused everyone on this call, so I apologize.
Yeah, right. So the better way to go ahead, Al.
Al.
I'm glad you brought that up, John, because I see that all the time because people ask me 12 or 24. If you have 24, we have a 12-month bank statement program and we have a 24-month bank statement program. We can calculate 24 at the same time. If 24 or 12, one works better than the other, you're selecting the 12-month or the 24-month. We have both programs. We can calculate both incomes. We have both available. So it's as simple as that.
Yeah. Thank you for straightening me out and everyone else on the call, Al. So there was another question here, and I lost it in the track, so I won't give credit to the person who actually asked the question. What if so Al, while you're hot, I'll ask this question to you. What if the person has only been self-employed for 1 year?
That's a great question, because that's something that I definitely was going to talk about. 1 year, we can do self-employed 1 year for a borrower as long as they're as long as they use business bank statements. That's going to be tricky because sometimes when people start the business, they're going to start with personal and then switch to business, but we need the business bank statements. And it needs to be same line of work. Think of like your standard Fannie Mae loan, stable and continuing employment. Have they been doing it 2 years? Does it look like they're going to do it 3 more? That's what we look at on this. Have they been in the same line of work for at least 2 years? Does it work? An easy, super easy example, you've got somebody that worked for a law firm for 4 years, and a year ago they became a partner. That means they own part of it now. Same law firm. That's the easiest scenario in the world. what I see a lot of is, the son works for the father. The son wants to start his own thing. The father's probably going to wind his down anyways. The son starts the same kind of business. Guys that paint, pavers, you name it, any kind of business, as long as it's the same line of work.
Yeah, so this is another, Carl is really active with questions. So what if they have 12 months in their current location, but have had several years, but not in the state they're working from? Drew, I'll throw that one out to you. It's again, that's a pretty unique scenario. So what she's asking, 12 months in the current location, but have several years, but not in the state that they are working from. But if, I don't know, Drew, let's have a conversation about this. So if they're 12 months in their current location and they can show income, then I think we'd probably be able to work through that, right?
Correct. I would just say the exact same thing. So if they're, number one, you have to dive into more of kind of what the business was. But if you, as long as the current business has been open and active for 12 or more months, we will absolutely take a look at that. And, as Al said, we'd want to make sure, it sounds like they've been doing what they've been doing, but at the current location, I think that's a definite yes, but we can certainly, peel back that and get more details.
Yeah, and that's the great thing about Al, Drew, and all our other account executives that are so experienced. They're going to get this information, and the beautiful thing, I'm going to say this, I'm going to sound like a broken record. We do this all up front, so the guesswork, within 24 hours, the guesswork is done, guys. It's either we do this and we get an exception, but we have to maybe get one other piece of information, but you're able to submit that file then if you get the yes from Al or Drew. I mean, it's pretty easy. And, I know there was 68% have not. The beautiful thing about, working with us, we're going to do all that up front. Drew and Al are pros, and they're going to hold your hand through the entire process. So there was a question here about 1099, and, we're about 27 minutes into this. So we're going to talk about some highlights of our 1099 program, and we'll still keep your questions coming in. But I'm going to ask a question. It hasn't been asked yet here. So, Al, I'm going to ask you this question. We talked about that gig economy, right? What if the person has a side gig, right, but is W-2? Would you still do that borrower on the bank statement program?
Well, you can't mix taxable income.
Nope, but I'm saying they're W-2'd, and they have, let's say they drive for Uber on the side.
Okay, as far as everything that I've run into, if you've got someone who is driving for Uber and they want to use the 1099 program, the W-2 is going to interfere with that.
All right, so here, as long as that self-employed income is 30% of the total income, we can use both. So it's similar to a borrower and a spouse. Their spouse is W-2, the borrower is self-employed. We can do that. We can take that self-employed income along with that W-2 income and use both those incomes for the under our bank statement program. So just
right. It's just tricky because of the percentages. So you'd want to, once again, the pre-approval, we can catch everything there. So you'd want to send that in and we can let you know if it'll work or not.
Exactly. So Drew, I'm going to ask you this question, and you probably get this a lot. Can you do a pre-qual on a TBD?
Oh, sure. Absolutely.
Wasn't a trick question, Drew.
Yeah, right. No, that would be, as John said earlier, if you know for a fact that, in your initial conversations with your borrower, I own a business, I do this, I do that. All right, let's set up a meeting to collect, all of your tax returns and everything. That would be something that, as John said, you go down the parallel paths, collect those bank statements and do a TBD, 100%. Then for sure. Don't wait till they get under contract and then you got your, then the heat's on.
Yeah. I mean, our goal here every day is to give you a good answer before somebody strokes an earnest money check.
Right. Exactly. Because we understand the borrower's vested interest and then the referral relationships that you have that you've worked hard to earn, you know, we're not going to put those on jeopardy. So let's talk, Al, give us some of the highlights of the 1099 program.
Okay, just some basics on it. What does the 1099 borrower and the self-employed borrower have in common? It's tax strategy. So both of them don't show accurate income. 1099 works great. I mean, guys, if you're going to talk to realtors are paid 1099. So we have flyers. We'll get into all that later, but this is a program that they can actually understand because, they've quite possibly had a problem qualifying for a loan because of their 1099 income. So what we're going to use is we're going to look for a 12-month average on 1099. So how do you do that with a 1099 borrower? For 12 months, we're going to look at last year. So just the 1099 form, not any other not anything else out of the tax return. And then we're going to look at year to date. Year to date is going to be, they'll probably have a pay statement. With that pay statement, we'll get the bank statements that match up the deposits. We're going to add it all up, and we're going to add it all up as a 12-month, from today back 12 months, and give you your income back. Once again, you get it right up front at the pre-approval.
Yeah. So let me switch windows here back to the questions here. Yeah. So Tiffany's asking, and Al mentioned, later. So just to give you what the second part of this webinar is going to be, we're going to talk about how you can quickly and easily get rates. We're going to talk to you about how to submit a pre-qual. And then I think probably more importantly, and Drew and Al, I hope you would agree, is our marketing portal. We talk about serving an underserved borrower. I think this is one of the most underutilized portals in that we've created content for you. So Tiffany, we're going to get there. We'll show you. We'll have your AE reach out to you and get you how to customize flyers for yourself. So Al, let's talk about some of the highlights of our P&L program, please.
Okay. We're talking about programs, and they're for self-employed borrowers. They're all doc programs, and we're looking at 3 of them. So if you want to set this up in sort of an easy way to look at it, is first, if the borrower is self-employed, you start with the bank statement program.
Mm-hmm.
Sometimes bank statement doesn't work because sometimes people are seasonal, so they'll go for 3 months without depositing. There can be a variety of reasons. So then we're going to look at.
Hey, Al, we got time. I'd go through just like 2 or 3 examples of why you would go 1099, or even before Drew gets to the P&L, why you would go those. Maybe is it NSFs, right?
It could be NSFs. Maybe.
Yep.
I saw a guy who had a contracting business. He finished a job, put out the money for it, and then didn't get paid on his contract and ended up taking the person to court, finally getting paid. This guy had a ton of NSFs. Well, as far as NSFs on the program, depending on the LTV, and we're going to look at it if it has more than 10 or more than 12, depending on the program, it might not qualify. So for that borrower, we said, okay, let's look at what's the next step in the chain here. The P&L program, this is step 2 out of 3. It's P&L with 2 months bank statements. What are those 2 months bank statements for? We're going to calculate them, and now hopefully the NSFs aren't going to be a problem at this point. They weren't here. We calculate them, and it equals 85% of the P&L income. Let's talk about the P&L income, that number. This is a P&L that comes from a tax preparer or their CPA. It's not audited. Why is it important that it's not audited? Because the cost to your borrower, it would probably, an audited P&L is a Schedule C that's not on the form. It'll cost them $5,000, $7,000. So it's not an audited form. You can get it. We're going to look at 2 months bank statements. 2 months bank statements back that income up, then you've got a deal. Yeah. Let's say sometimes people are cash business, and I've seen it before. I'm in Detroit. We have a lot of people that are cash business. that don't actually deposit their money in the bank, at least not that often. So if you've got somebody like that, we're going to go to step 3, which is the P&L without the bank statements. Now, what's the difference between these? The FICO goes up, the LTV goes down. If you're looking at just a P&L only program, P&L only is going to be a 70 LTV. So these are, all different options for, we're talking about self-employed people. They're complicated. That's why we've got multiple options for them.
Right. And now you said it's something complicated. I bet you if we gave everyone on this call with us their tax returns for one individual, you'd probably get 70 different calculations. So, and the beautiful thing about Angel Oak and our bank statement program, whether it's P&L or 1099, is we're calculating that all up front for you. So there's one calculation, and that's the one that's going to be used throughout the entire underwriting process. So, Drew, just give it. Al touched on the P&L, but just give us some of the highlights here, please.
Yeah, absolutely. They're very similar to our bank statement because it does fall under the same kind of program umbrella. So $150,000 minimum loan amount will go up to $4 million. You can use this for all occupancy types and all transaction types: purchase, cash out refi, rate and term refi. As Al said, and John referenced as well, is the majority of the time that I see that progression from, okay, let's go bank statements. All right, well, the bank statements don't work because we have, overdrafts, or we have what we call inconsistent deposits, where maybe your borrowers are general contractors, or maybe your borrowers / referral partners are realtors. They may have several outstanding months, and then maybe a month or two that they don't really close loans, but their overall yearly is still very good. And that's where you would transition into our P&L. Our bank statement program, lots of options, or times people come to us for the option is they may have some seasoning requirements of credit events, or I call housing events. So our bank statement requires 2 years after foreclosure, 2 years after bankruptcies. So it's certainly something to keep in mind as well. We do allow, 1 times 30 lates as well. Sometimes we get those.
Bingo! You just made me remember that, and thanks for bringing that up. Yeah, a 1 times 30 on their mortgage, and we'll still do that deal. I'll give you an example of what happened. A perfect example of what happened for a borrower, why she had to come to Angel Oak, was she sold her house. She thought the title company she was using was going to wire the funds and pay off her loan. But guess what? They mailed it, and she ended up with a 1 times 30, and she couldn't qualify conventional. So we took her. I think it was on our Portfolio Select or Platinum. It was a full doc deal, but that's real life circumstances, and she was a great borrower. She just had a 1 times 30, but she wanted that house. She understood, where the values were going, and so that's a perfect example, Drew. So no fault of her own, but conventional or jumbo wouldn't take her, and therefore we were able to help her and get her in that home. So let me get back to the question queue here, guys, just so, and then we'll talk about So Elias is asking. I'll go to you on this, Drew. Elias is asking, on a 1099, do we still need 12 months of bank statements? And Al kind of touched on that.
Exactly. Al did touch on it. So no. So short answer is no. We don't need 12 full months of bank statements. So at this time of year, you really kind of have 2 options. So you'd collect your 2024 1099, and then we need some sort of year-to-date income, whether who they work for can provide an income statement, a year-to-date income statement, or where it gets a little bit paper intensive is we would need to collect the year-to-date bank statements. So kind of a hybrid And as you get later in the year, then we obviously collecting, so if you're in October or November, it just may behoove us just to do the 12 months bank statement at that point. So that's the reason why you call us. We'll walk you through everything.
Yeah, and Saeed's asking, do you have any marketing materials? Saeed, we're going to get to that. Probably be in about another 10, 15 minutes. So hang in there with us, please. Al, Leslie's asking, what's the average close time for a bank statement loan? It's a great question.
As I try to keep track, I try to look at, how long these things actually do take to close. And right now, I mean, mine are closing inside of 30 days, right inside of it. Some are 20, some are 28. You get a couple that run over. If you run into something goofy, you find out it's a non-mortgable condo. We can do it, but we got to get it approved. Things like that might add time. But yeah, about 30 days.
Yeah. So Al, while you mentioned non-warrantable condos, we do them, and do we reduce an LTV if the condo's non-warrantable?
Non-warrantable, no.
Yeah.
We don't reduce the LTVs. Guys, I talked about stopping people from stroking earnest money checks. If somebody knows, or a lot of times the realtors would know somehow that it's a non-warrantable condo, here's all you need from us, and we'll get into the pre-approval in a little bit. But if you just get us the condo questionnaire, it's great if it's on our form, but if it's not and you got the data, we're going to look at it. As long as we've got that, we can give you a very good idea. And then if maybe we need a little more information, we can get it. This is before you write an application. Yeah. So, as far as troubleshooters and, helping you with, things that maybe aren't other people's wheelhouse, this is a good place.
Yeah. So Drew, I'm going to ask one question, and then we're going to get into Al's going to take us through how to get a rate quote and then submit a pre-qual. But Drew, a recent enhancement, how many months reserves do we need now on the bank statement program?
This is a tremendous bank statement. So we cut our reserves in half. So we only need 3 months principal, interest, taxes, insurance, association if it's a condo, reserves, and we only need those reserves on the subject property. So unlike conventional, where you have to then do reserves for the primary residence plus any other properties that they own, we're focused on our subject property. 3 months reserves.
Yeah. So, guys, great questions. Again, if we didn't get to all of them, we're going to still try to field a few that come through. I see one from Cindy here about the condos while we touched on it. If it's around structural, Cindy, unfortunately, that's one we're going to lend on. But if it's an insurance claim or something like that, we'll lend on those. And again, specific to your scenario, if you've got one, we'll get your account executive to reach out to you and get that taken care of. But again, if we didn't get to some of your questions, we'll have your account executive reach out. This is being recorded. We'll get this out to you before end of day tomorrow. And so Al, take me to how to get to how to look at rates and then how to submit a pre-qual.
Okay, so you're going to click on the second bubble from the left, which is the non-QM quick quote. And this is when you're trying to figure out, okay, can I do this? I don't really know that much about non-QM. You can call us or you can go straight here, because this is going to give you, if it gives you a price with the criteria that you put in, it's okay with the criteria you put in. Maybe you'll have other questions on top of that, but we're looking at a 740 FICO. We're in Michigan. Let's look at a doc type, which is going to be, let's look at the 12-month or 24-month business bank statement. Now we're going to go down. If there's nothing else, if they're just buying a primary residence, which we've got all this down here, you see that you've got the LTV that's requested. You only ask for a 75. We're going to tell you what you can get, which is a 90. And if you ask for a 90, you can only get a 75, then we're still going to tell you the 75 is there.
Right. You're going to so Al, does that 90% have, we get away from this because we've been doing this so long, but does that 90%, I'm going to ask you two questions, Al. Does that 90% have MI?
There's no mortgage insurance on any non-QM product.
Right. And then the second thing is, what if the borrower only has 5% down? Can they use gift funds?
If they have 5% down plus the 3 months reserves for PITI, that's the minimum investment. They can get gifted for the rest as long as it's not a gift of equity.
which is great, right? So,
Yes, it's fantastic.
so look
It
at
puts
this rate at a 75% LTV, less than 7%. Now that's a par rate, right? So,
right.
so
So you
Al,
can.
go ahead, take it.
Okay, so we're going to go in. You see what we're going to give you the closest to par rate under the rates and programs, but you hit view rates. So once you click on
I
that,
want to back up. What this is getting fixed. I know we just said 3 months. It still says 6 months. It was just a recent enhancer. This is getting fixed. So we're not. Disclaimer: Al's right, Drew's
thanks,
right, I'm right. It's 3 months. So just go ahead, Al.
so we're going to view the rates. This is going to give us the range. Now, what you're looking at, guys, this is borrower paid pricing.
Mm-hmm.
This is wholesale. So if you want lender paid, you can build the lender paid in there. When you go in and use this, this is an open access pricer. You can go in anytime you want, but we don't know it's you and we don't know what your LPC is. So what you'll need to do, if you want to see it with the LPC, pick the LPC and we'll build it in. This is just your straight, borrower paid pricing. So if we look, you're going to see that, okay, let's say you want to split it up. You want to make charge them, you want to charge them 2, but you want 1.25 to be built in the back. Then you can go on here and you can select a 6.99 rate, which 699 is great because it doesn't bring 7 into the picture for your borrower. I mean, I don't know how it works. It's worked at gas stations for years. So
being a Michigan guy, I guess you're gonna go with the gas station. I like.
yeah, we do motor in the city.
That's what. So Al, if a loan officer is in here and they're playing around with this,
Yeah.
and they go and select option, are they locking the loan here?
You're not locking the loan.
Okay.
This is when you select the option, it's going to open up the pre-qual. So you're looking at this, you've got a 1003, at least at least a TBD 1003. You select it and it's going to open up. This is your 3-4 drop box. If you have it, drop it in, great. If you don't, just hit next because you don't need it. We want a PDF anyways. There's going to be about 6 or 7 fields here. I would always recommend picking my name.
Wow.
Okay, so
I think Drew might have something to say with that.
it's so you're going to put in your company, your name, your NMLS, just basic stuff. Loan documents. If you need to put it in, it's got a red asterisk next to it. Your 1003 has a red asterisk. Your credit report has a red asterisk. We'll take any kind of credit you have. A lot of people are pulling, soft pulls and things like that, it's fine. Just remember, if something changes, it changes.
Yeah. So Al, that was a question in the queue we didn't get to.
Okay.
I don't know who asked it, but will you do a pre-qual off a soft pull?
Yes, we definitely will.
But like Al said, there's a caveat. Things can change. So just.
And when credit comes in, when you pull yours, we use yours, even though we pull one on the back end. So as far as what you're putting in your bank statements, this is going to be 12 months or 24 months. This is going to be personal or business or both. I have a lot of people now that send both because we can calculate business, we can calculate personal, and we can figure out which one works best because they both show us numbers in different ways.
So Al, this was a question that wasn't asked.
Okay.
What if your borrower has 2 businesses, separate businesses, no commingling of funds? Can you use both of those businesses for income?
Yes, definitely. You can use both of those.
You don't want to think about it? No.
I've done it so many times. I mean, you see people that have like 5. I don't know how they juggle it, but you'll see people that have multiple businesses. Which thank God for bank statement, because if you've ever seen the tax returns with a pro forma on top of it, this is a great alternative. So what you're doing is we're going to use one set of statements for each business. So that's basically how we work it. We'll do up to 3 standard. Few questions on the bottom: bankruptcy, discharge, things like that. You're going to submit. This is going to send the pre-qual directly to us. We've talked about how important the pre-qual is, and it's important enough that I'm going to say it again. This pre-qual, every day, what we, our filter is to keep you above problems. I want to give you a great answer up front because I'm going to give you my pre-approval letter, and I'm going to make sure it's a good one because your pre-approval letter has your name on it, not mine. So you want to make sure that what you're getting is good. We're going to look at this. We're going to shoot this full of holes. What we know about a pre-qual, we look at these loans every day. And what do we look for? Whatever sticks out, whatever you're not used to. Look at what we're doing here. We're doing the income. So the income sticks out on this. We're doing the income first. But we also, for anything else, there are usual problems that can pop up. And our goal is to identify anything that we can up front. And what's very helpful is you let us know. See that little additional comments? Let's say that if your borrower is a permanent resident alien or something or non-permanent, just put the note in there. Whatever it is, if it sticks out, put it in additional comments.
Yeah.
Because we're going to look at.
Go ahead, Al. Sorry.
We're going to look at it. We're going to get it sorted up front.
Yeah. So and again, I think the real thing I want to drive home is Al, Drew, all of our account executives across the country are doing this up front. And hopefully it's before you or your borrowers put in a contract on a home. So, and I'd be remiss, we do this for purchases, cash out. Drew mentioned the 75 LTV cash out. And we do them on refinances. We do them delayed financing. So I think it's critical that who your account executive is. If I don't leave here with anything else today, know who your account executive is, because that person's a pro. And like Drew and Alice said, unless there's questions on this, you'll have a pre-qual back within 24 hours. So, and Drew mentioned they're knocking them out pretty quick. The bank statement team. So, all right, Al. So Drew, let's talk about anything we've done so far on our website. You don't need login credentials, right, Drew? That's all. You can run scenarios all day long. You can submit a pre-qual without being an approved broker. So I would tell you to get approved. Al's great at getting people approved, right? But I would tell you not to wait till you have a deal to get approved, even though our approval group right now they're turned in packages. If it's a complete package, I've heard they're being turned almost in 24 to 48 hours. So it's crazy. So now would be the time to get signed up, I guess, as I'm trying to say. So, all right, Drew, let's talk about, I think it was Saeed asked about marketing materials. So let's talk about how to get there, and let's talk about some of the things we can help our customers market themselves. So.
Sure. So as John just said, to get to the 9QM Quick Quote, that is free and open. You do not need to be or have credentials. To get to the portal, your company does need to be set up, and you do need credentials. But once you get those credentials, you click on the TPO portal login. You'll be provided a username and password. We'd be able to go to the marketing portal.
Yeah, give me a minute here. I timed out. I had this, so go ahead. Fill the air for me, please, Drew.
Absolutely, all good. So the marketing portal is, John, I know mentioned in the very beginning, is extremely, in my opinion, very underutilized. So what we can do is, once we get in there, we'll be able to show you to personalize every single flyer that we have for every single program that we have. You're going to be able to put your information on it. You're going to be able to put your picture, your company logo, your name, your phone number, your email address. And the best part is Angel Oak's not even, that our name isn't even on there. So you'll be able to go in, you'll be able to send these flyers to your referral partners. You can provide them. I know people out there doing a lot of broker opens, doing a lot of open houses over the weekend. You're out there, as they say, shaking hands, kissing babies, and these will absolutely be able to get your name, the fact that you're able to do these programs out there and to be able to generate business for you. So John's just logging in as a kind of an emulator. So basically, once you log in, there's a marketing portal there. So as you hover over the marketing portal, you'll see there's a list. John's going to go to the flyers, but as you see, we have realtor presentations. We have social media images.
We're
stuff
going to
for
talk
you to
about
be
all
able to
of
go.
it.
Yeah.
Yeah, absolutely.
So you
So
go
for
in.
sake of time, sorry, Drew, for sake of time, I
Yeah.
already pulled one up earlier.
Yep.
So, but these are, I want to show, these are all the flyers we have. Yeah, I'm scrolling through them pretty quick here, but we have one for every program we have. We have one for every scenario we have. So Drew, I pulled one up earlier, put this is actually my contact information, people. So if you don't know who your AE is, feel free, text me. This is my cell phone. This is my email. So go ahead, Drew.
Yeah, so that's okay. So once, it's your specific username and login. So once you go in, as you can see, you fill in your information. You only have to do it once. So let's just say, all right, well, you know what? I filled in my information. Everything looks great. I uploaded an image. You know what? I'm going to download the bank statement. But you know what? I may take, because I know this one realtor does lots of other, DSCR deals, or hey, I want to start, I did some bank statement loans for a bunch of people, and now I want to start doing offering bank statement HELOCs. So all you got to do is change the program, download the flyer.
Right. So yeah, Drew, it's and this is where I'll maybe sound a little condescending, and I apologize because we sit here and we provided so much content for you to use. I think I counted, we have almost 70 different types of marketing materials for you, whether it's on Instagram, LinkedIn, and we'll talk about the social media in a minute, all these different flyers. You can set yourself up with a non-QM marketing plan for the next probably 60 weeks. So
Can I add a little
anyway,
bit
I'll
to
get
that,
off my high horse there. So
Yeah, John, you mentioned that, it's the marketing portal is slightly underutilized. I've seen people utilize it, and how do you utilize it? We work with, these programs are designed for self-employed borrowers. Well, who works with self-employed borrowers? Let's use the easiest one. The bank statement loan exists because good CPAs exist. If you want, you can use this marketing. These programs, think of any different kind of self-employed group. Let's use the CPA as an easy example. Take one of these flyers into their office and say, are you interested in a program for your customer where you don't have to reinvent their tax strategy to qualify for a mortgage? If you got a shot at getting their attention, that's it right there. And you can call your account executive after this. We can show you how to get somebody's attention in the first 20 seconds with these flyers and who to talk to.
yeah, and Al, well said. I'll leave it there. So Drew, let's talk about the social media posts.
Yeah, I mean, well, I'd say who isn't, but if you're not, I'm sure most of you guys are either on LinkedIn, Instagram, Facebook, any of the Twitter. So these are very similar, to the flyers. No, name, Angel Oak is not anywhere on it. All you have to do is click on which one you want to market this week, this day, next month, and grab them for yourself. They're they're already formatted to the particular social media platform that you're using.
Yeah, and in this case, Drew, right? We've got bank statements driven towards the borrower, right? And we provide you the content here, right? And we have bank statements delivered towards realtors. And I usually quote this stat: 9% of the loans we close on our bank statement program. When I say bank statement, I'll throw 1099 and P&L in there. But 9% of the loans we close under our bank statement umbrella program are realtors. 9%. So, that might be a great person to market that bank statement program to. So I know we are at the top of the hour, so I want to be respectful of everyone's. Drew, talk about the presentation.
So I'm sure I can't imagine that lots of people aren't doing, just as John said, to try to get, and Al said, to try to grab somebody's attention who hasn't done a realtor presentation in the last, year or so. We have made it pretty simple for you. It's a PowerPoint, download it, edit it to put your information in. There are multiple pages, very simple. Again, it takes all of the guesswork out as, hey, I really want to talk to this realtor about the programs that I have that are outside the box, because everybody's got FHA, USDA, and conventional. You want to be able to offer something different. It's right here for you.
Yeah. Yeah. And it's a powerful presentation. And the great thing about it, if Al or Drew, can't be there in person, they can be there via Zoom or whatever. They'll present on your behalf, and they don't say anything about Angel Oak. I kind of jokingly say they're like in the witness protection program, right? So, they go in there, and I'll use Sahid here because or I'll use Carla. She asked a lot of questions. So if I go in there and present on Carla's behalf, I go in there and I just say I'm one of Carla's investors, and everything gets directed back to Carla and her team. And if you can get 12 realtors in a room, the odds are you're going to get one of their loans. 9% of the ones we closed today are realtors. So I'm going to bring up one last thing because someone was asking for the phone number. So my phone number is here. This is my email address if you guys need to reach out. So Drew, in closing, I know we've kind of over a couple minutes. So give us, in closing, any words of wisdom.
I would just say I use it all the time. Non-QM loans, bank statement loans, they're not difficult. They're just different. Okay. And once you get past figuring out the qualifying income, which will do that for you, it's just like a normal loan. You have your income, and now all of a sudden, we still have DTI. We got to calculate, all the debts, real estate. So, don't be afraid. We're there to help you and hold your hand. And we're as vested just as much as you are to have a good experience.
Yeah. Al?
Well, just, to remember that you don't have to be an expert at this because you have us. You have an expert behind you. Whether it's for, I've done the realtor presentations with people, and it was interesting because they were impressed with somebody. They had, you came in, but you had somebody backing you. So it's definitely very helpful, but you don't need to know the guidelines. If you're going to memorize anything, just memorize our phone number.
I like that.
Don't scratch in your head. We see this every day, all day. Yeah. The phone, we're salesmen. We answer our phones.
Yeah, and the thing I love about it is, you guys, did a great job, and we're 3 minutes past, the hour, and I apologize again. This is recorded. We will get this out before end of day tomorrow. I thank you, Al. Thank you, Drew. Really appreciate you guys taking the time out of your busy day. And on behalf, if you haven't closed a loan with Angel Oak, if you have closed a loan with Angel, thank you for your business. If you have not, hopefully you feel confident enough sending us a loan based on our subject matter experts. So on behalf of everyone here at Angel Oak, thank you. Have a great day. Be safe. Enjoy your Memorial Day. Thank you for attending. Have a great one.